Okay. Um, want to be sure that we are live. Okay. I don't know if anyone can hear me, but while we're waiting for others to join, okay, I can see two people here already. So let's just give ourselves like 3 to 4 minutes for others to join. Okay, please, if you can hear me, can you just type hi in the chat box to be sure that every one of us can hear ourselves? Okay, thank you, Luciola. Thank you, Michael. Thank you, Ayo. Okay. Just give us like 3 more minutes for others to join before we commence or move ahead. Okay, good morning, everyone. Good day, good morning, good afternoon, good evening from anywhere you're joining us. And thank you to today's training. And my name is Emmanuel. I will be anchoring today's training. One of the facilitator is unfortunately not here, but we also have a well-seasoned professional who is going to be taking us on today's training. His name is Osas Ekato. So he's going to run us through the process of compliance, what we need to know all about compliance today. But before he comes up, I would like to just do a welcoming, um, give us a welcoming note in today's world, what compliance is all about and what. Please, if you can hear me, can you just type hi in the comment section to be sure that we are all together here? I want to be sure that we can hear each other. Okay, thank you. So, as I was saying, today we're going to be talking about compliance as a profession. For those of us that are just starting a career, and for those of us that are already in compliance, and for those of us that wish to switch from compliance, it is notable for us to know that we live in a world where financial institution and financial transactions happen in just a milestone, and where digital wallets are every day replacing cash. Many of us can possibly not remember when last we used cash to transact or possibly go to supermarket to pay with cash. But with a swap of our card, with just opening our wallets or opening our mobile app, we can easily transact without having any issue. So for every single financial institution that actually wants to survive in today's financial environment, there is need for you to inculcate compliance into your um, institution. And this being said, for also every financial institution that is surviving, that is standing tall, they are also as a result of the compliance function in those environments. And what is this compliance? That is what we want to know today. Who are these compliance? What is their function? What do they do? And how do they come about? So these are things that we'll be hearing from Osas today. He will take us through what compliance is, why compliance, what compliance does, and the benefit of being a compliance officer. As of January to date, CBN has released not less than 8 circulars, and these circulars cut across every financial institution. It talks about what is required of every individual as a person, and also from every financial institution. So these circulars has benefits to you as an individual and to me as an individual. The other aspect of the circular is that when we are aware of this, when we are aware of this, um, when we are aware of our environment and when we are aware of these circulars, we can actually benefit from it as an individual, not just as a corporate body. So, that being said, let me just make reference to some of the circular that I'm referring to. We have, for instance, one of the baseline circular that was released in March. So, what did this baseline say? It says that as an institution, you're going to be carrying out a real-time transaction monitoring. Now, the benefit of this circular to you as an individual is that there is going to be a sprout out of job vacancy in the nearest future. So between June, which is the gap analysis period, to possibly December, there's chances that every financial institution will be looking for you as an individual who wants to venture into compliance to either do one thing or the other for them. Because in as much as technology is evolving, we also know that crime also evolve every day by day. So if we now depend on technology to do a real-time transaction monitoring, it is going to be difficult. And that is why the CBN in their capacity has said that every financial institution needs to equip themselves with staffs and with everything that is required for them to carry out a real-time transaction monitoring. So we also have other circulars that has also cut across every other department and every other divisions. We have circulars that talks about immediate reversal of airtime. We have circulars that has talked about the BVN circulars, which was recently communicated to every one of us. If you have a bank account, you must have gotten a message from one of your bank telling you that, oh, from May 1st, you cannot change your the number in your BVN more than once. So those are the functions of compliance. Compliance is a regulatory warehouse. Compliance is policy interpreters. Compliance is not just a checking box, but they are now the core value or the core house that carries on everything that happens in financial institution. For that your money to move from bank A to bank B, it must be confirmed by a compliance officer. So these are the things that we want to learn today, and how we can also become a beneficiary of this profession in time to come. So with your virtual clapping ovation, please join me to welcome Osas Emmanuel Ekato. Thank you very much. Hi, Osas. If you can hear me, please, can you try speaking? I think you're muted.
Okay. Okay. Good morning, everyone. Can you hear me?
Yes,
can you hear me?
Hear you. Yes, we can hear you.
Okay. So, as apologies for missing the introduction bit. Just a slight challenge with my device, so I had to switch device. Okay. I'm sure Emmanuel has given a very solid overview of what we are here to achieve today. So basically, to just give again, it's going to be a brief overview, so we don't belabor it or make this a kind of information overload. So as much as possible, we'll try to simplify the concept we'll be talking about. And if there are questions at the end of the day, we'll be taking them as we progress. Today, we'll be talking on what is compliance. So again, Emmanuel has given just a brief overview of what compliance is. The whole idea of okay, so the agenda. Let's start off with the agenda. We'll talk on what is compliance, why you should choose compliance, the roles of compliance in financial institutions, as well as of which fintech is among. 4 cardinal points, the skills and career path, as well as practical insights into the compliance function. So yeah, you can put this in presenter mode, so it's bolding kind of. Okay, so let's start off with the what is compliance slide. Okay, so basically here, talking about what compliance is. Compliance is the process of assuring that organizations adhere to laws, regulation, guidelines, internal policies. So again, the whole idea of compliance basically is for us to be able to avoid penalties, and also make sure that our system is not being used to as proceeds for illicit funds. So the whole idea of the compliance function is born out of the fact that we have actors out there, actors who want to use the system to clean funds. Maybe they have gotten funds through various vices, through money laundering, or they are trying to sponsor terrorist activities, or they are trying to be involved in proliferation financing. So to break it down, money laundering basically let's say someone has gotten funds through illicit ways, one way or the other, maybe through kidnapping, through Yahoo Yahoo in quotes as we know it, through various vices, and there's need to clean the funds. Of course, they will need to pass through the system. Our function as compliance is to ensure that we block such activities. We are able to figure that out and ensure that the system is not being used for such illicit functions. So same goes for terrorism financing or combating proliferation financing. So for proliferation financing, we're talking about weapons of mass destruction. So anything that has to do with biological or chemical weapons. So again, we are supposed to ensure that actors within that space are not able to have access to funds, which in turn would frustrate the activities which they are trying to carry out. And that has a draw line to ensuring that we keep our economy safe. So in as much as we are keeping the financial space safe, it translates down to the economy as a whole. So the whole set of processes, the whole set of conduct that we put in place to ensure that actors who are within this space are unable to carry out their enterprise efficiently is what the compliance function is about. And of course, to ensure that we are there to such directives that have been passed down from regulators. Penalties are meted out from time to time to defaulters. So in which way that which is where the compliance comes in. We need to ensure that these laws, these regulations, these guidelines that has been put in place to ensure that the whole system, the whole financial system is not being used to pass funds for any of all these devices or any of all these illicit actions we've talked about is what make up the compliance function. Because if we don't adhere to them, there are penalties, and you don't want to be fined. You don't want a situation whereby your financial institution makes money and bulk of it is going for penalties and all that, because it has a ripple effect on not just the profit of the company, but as well as the reputation of the company. So the whole idea of compliance is basically the intersection between three powerful forces, the law, the international standards, and ethical conduct. So of course, again, ethical conduct is another aspect of compliance, again, that is equally important, because while on the one hand, we want to ensure that we are doing exactly what the regulators has put down, we need to ensure that the people within the financial system that are supposed to carry out these activities are of the highest ethical standards, ethical behavior in such a way that they understand what the responsibilities are, they understand what the risks are, and everyone acts accordingly. So what would enable that behavior is where ethical conduct comes in. So from time to time, there is always need to elaborate or give out trainings and ensure that everyone working within the financial space is of ethical standard. And of course, the compliance personnel will be the one to champion that. If you are telling, let's say, the sales or the operations person, for instance, to be of the highest ethical standard, you as a compliance personnel as well, you can't be found wanting in such place. You can't be found wanting in such when it comes to ethics, as it were. So basically, again, as Emmanuel also said during his introduction, where he talked about compliance being part of monitoring and all that. We'll talk more on that as we go on subsequently. You would see how it's important that the whole compliance function, making us know that before you bring in anyone to the banking system, you need to understand who this person is, which is why before you open an account, they will ask you for your ID, they will ask you for where you live and all that, and evidence of such, So all that boils down to the compliance function, and it's important. So let's go to the next slide, which is compliance as a profession. So basically, compliance has evolved from just being a support function into a strategic pillar for serious organizations. So as I've said in my introductory remark as well, compliance is not just a support function. It's not just it's no longer just a tick in the box exercise. Maybe more or less like, okay, yes, regulator has asked us that before we give you access to our financial space, we need to get your ID. We need to verify that your ID is valid. We need to get your address verification. We need to verify that you actually live where you claim to live. Aside from all that, it has become very strategic now, because the actors that the compliance seek to fight against are evolving over time. They have moved from just it being just the rudimentary way as we know it before. So and basically one of the things that maybe was not even captured here in the slide, and rightly so, is maybe whenever we are trying to explain the compliance function, we always talk about it, and how it fights against illicit activities. We always talk about it from the angle of, let's say, placements, layering, and integration. But the truth is, the actors have even moved beyond that. So, in the same way, the compliance function has also moved beyond just that tick in the box to be a very strategic pillar, and to ensure that in terms of risk management, in terms of regulatory adherence to the various laws and circulars that have been released from time, in terms of proper governance within the organization. Because again, governance is very, very important. If governance is not right, compliance probably would probably fail. Governance has to do with how the management from the top, the tone at the top in terms of management interpretation, in terms of management backing of compliance. When you know that the MD or the CEO or the chairman of the organization, as it were, is compliance oriented, it's going to trickle down in such a way that no one within the organization wouldn't fall into place. So governance is equally a very, very important bit of the compliance function. Then as well, the ethics that we'd also talk about. So basically, they are the price which they of operating in today's financial world. And someone has to be the professional who ensures that that price is paid correctly. So we need to ensure that in terms of risk management, in terms of regulatory adherence, in terms of ethics and governance, all these make up the structure of what compliance is, if you're talking about career. So in terms of why choose compliance, so yes, compliance is in high demand globally. There's a career stability in terms of compliance. Your primary function is to protect the financial system, which is a very important function. There's competitive compensation as well, because it's a function that requires proper analytics. You need to always think on your toes. You need to, as well as think more like the person who you are trying to fight against, and ensure that you one step ahead of everything. So again, as Emmanuel also said previously, there are several CBN circulars that have been released recently, all in a bid to ensure that the financial system, the regulatory oversight is strengthened. Even in recent times, since the beginning of this year, there are quite a lot of circulars that have come out, circulars in terms of FX, circulars in terms of baseline standard. What the baseline standard basically is trying to talk about is strengthening every AML tool that you would have. So right now, what CBN is saying is, it's not just enough for you to have tool. Yes, you can have the various compliance tools to manage your KYC, to manage your transaction monitoring. That's the SumSubs of this world, the Actimize, the RegFile, whatever tool you decide to use. CBN is not interested. What they are interested in is how well is those tools being used to carry out the compliance function. So they want to see the intersection between your KYC, that's know your customer, That's when you onboard customers. How well do you take note of the risks that each customer poses to the organization based on the information you've collected? Even after you are not done with that, how well is that information married with your transaction monitoring process? Either to what we probably have or what most organizations have right now is you would see after you've done your KYC and you've gotten your documents, that is in one bit. Another bit is the transaction monitoring. All this done in isolation. So what CBN wants is right now there need to be a synergy between that KYC, that monitoring, to the continuous life cycle of the customer. So in as much as at one go, they want to be able to see that, oh, when we were onboarding this customer, this and this was the document, this and this was the risk exposure that we put down as what this customer would be giving to us as a financial institution. Then side by side with the transaction monitoring, after we have gotten these details, these and these are the set of transactions that this customer has done over time. So what they want is that complete marriage. Your risk management process, your compliance risk management process has to be synergy. There has to be synergy in that. Nothing should be done in isolation. So that in itself has created a kind of want for the compliance function, which is why there's high demand globally. So sorry, can you still go back to that previous slide? Sorry. So that in itself talks about why compliance is become very, very important, and it is no longer just a tick in the box exercise, because the regulator is moving from just that tick in the box exercise to ensure that everybody now, talking about all financial institutions, properly have tools that are doing what they are actually meant to do. So that in itself talks about high demand. That in talks about career stability, because there is always going to be those actors, and there's always going to be evolving regulatory responsibility, regulatory obligations, and there's need for compliance officers to be able to interpret these regulatory insights, to be able to apply the regulatory obligations to the organizations where you belong. So again, that boils down to protecting the financial system. So you see, it's a very serious profession. It's not if you are going to come into it, you would have to always articulate your thoughts appropriately. You would always have to be able to interpret basically. And again, you don't even need to be a lawyer to do that. If you understand English properly and you are within a community of compliance officers to be able to also assist in gaining more insight into regulatory obligation, you can do very well within the compliance function. So then there are, of course, there are diverse career paths within the compliance function. We will touch on some of those career paths as we produce, because as we go on rather, because of course it's not just compliance is not just a one cap size fit all, as it were. There are various teams within the compliance function, and of course, in as much as it's important as a compliance officer to be grounded within all teams within the compliance function. At the rudiment level, when you are starting off, you would need to specialize in one bit. Then, of course, broaden your specialization, broaden your expertise as you progress along the career. So next slide, please. So the importance of compliance. So of course, as we've also made allusion to in previous conversation, it prevents financial crimes, it protects institutional reputation, it ensures regulatory alignment, and it also promotes ethical culture. So I'm sure I've talked about this previously. So again, prevents financial crime. The whole set of financial crimes, when we talked about money laundering, talk about terrorism financing, talk about proliferation financing. So be it actors that are trying to claim money that they've gotten illegally, be it actors that are trying to fund terrorist activities, and a good channel which they use for funneling terrorism activities is usually through NGOs. People can just come up and say, "Oh, I'm into NGO. My NGO is for women alleviation, or is for poverty alleviation, or is to help agency, or is to help areas that are hit by a whole lot of terrorist activity." So there are a whole lot of reasons why people can set up NGOs and crowdfund and get funds from various institutions or various individuals. But the problem usually is, after the funds have been collated, what is it used for? Is it actually used for what it is set out to be, which is what the NGA set out for, or funds are diverted for other activities? So the whole spectrum of financial crimes, from money laundering to terrorism financing to proliferation financing, which we talked about, which is the making of chemical and biological weapons, we need to ensure that we prevent such, which is where compliance comes in. Compliance is the team saddled with that responsibility within all financial institutions to ensure that all these vices are kind of frustrated, basically, are frustrated, to make sure that the financial institution is not used as conduit to move such funds. So again, the next one, which is also protect institutional reputation. So of course, you want to protect your reputation, because there are investors here and there seeking to invest, and investors would only invest in your financial institution if there's belief that things are done appropriately. There is no regulatory risks in terms of maybe supporting or not preventing financial crimes appropriately, and risking with license withdrawal from the regulator, or risking regulatory penalties that could have adverse effects on income. So again, the compliance helps in protecting the reputation of the institution, because the compliance function done appropriately is what is going to ensure that the whole institution as a whole is perceived as a proper institution, doing exactly what the regulator expects. So again, it also ensures regulatory alignment. As we've said, from time to time, regulators usually release circulars, release laws, release directive, obligations, guidelines that we need to follow. So compliance function, again, is important, because we are the ones saddled with the responsibility to ensure that we align with regulatory expectations. It's not just enough to be able to receive such laws or receive such a directive. You need to ensure that the organizations aligns with it. So that means you need to monitor the implementation of such. So even if the responsibility does not fall directly within the compliance function, let's say, for instance, when CBN was releasing back-to-back circulars that help to strengthen the FX bit, so maybe that might not directly be compliance function. Maybe it's the treasury team, maybe it's the operations team within the organization that has to implement such. It is the compliance responsibility to break it down and engage relevant internal teams to make sure that they comply or they align with what the regulator has directed. Then, of course, ethics, which I've also talked about, compliance function, of course, side by side with internal control. We need to ensure that we promote ethical culture within the organization. Next slide, please. So compliance in financial institutions. So again, I've talked about the various, again, in my previous, while I was explaining one of the points previously, I said there are various teams within the compliance function. So this slide is just trying to elaborate more on it. So again, each organization can choose to name these various functions the way they choose, but the whole idea of it is still what is captured here. So for AML CFT monitoring, so basically where you have institutions where we have the team, basically in terms of monitoring, you monitor the whole activities that borders around making sure that the system is not being used for that. We have transaction surveillance, which is a real-time monitoring all transactions. So usually, of course, for any compliance function, there are usually what we term pillars of compliance. Transaction monitoring is one very important pillars within the compliance function. You need to monitor transaction, and to be able to do that, you have to have tools which you use in monitoring. So be it real time or near real time, as CBN as recommended or as obligated in recent times. Because previously you might have institutions who monitor transactions maybe through Excel sheets, and maybe that is post transaction. After the transaction has occurred, then you try to look for any abnormalities within that within a set of transactions that have occurred. So, but right now, CBN is expecting more. It has to be real time or near real time. So there has to be transaction surveillance in the sense that you monitor transactions using any AML tool of your choice. There are various transaction monitoring tools out there. Your use case, of course, is important, because several financial institutions have various specialty. There are those who specialize maybe in FX. There are those who specialize in payments, that's card payments. There are those who are just in microfinance and the like. So your use case, of course, would inform the type of transaction monitoring tool you will go for, and the type of transaction monitoring rules you are going to also calibrate within the tool. So the transaction surveillance is a very important bit within the compliance function in financial institution. And of course, regulatory reporting. So of course, there are several reports that we need to render to both CBN, to NFIU, as the like from time to time. So CBN expects several reports monthly. There are some reports you have to do quarterly. There are some that are annually. There are some that are annually. So reports such as fraud reports such as AML function, your control function, your training reports, the even conduct reports in terms of how any employee that may have been let out, in terms of maybe in terms of any illegal activities, or in terms of any misconduct, which is where ethics come in. So any unethical practices that may have been observed within employees of the institution, which might lead to maybe punishment or maybe a sacking of such person. CBN also wants a report on such incidences. So there are several reports like that. To NFIU expects reports regarding STRs, that's suspicious transaction monitoring reports rather. So any suspicious transactions that may have occurred, of course, there are a whole lot of indices that make up what would stand as a suspicious transaction. So of course, if any of those transactions within your system falls within that, NFIU expects you to report them. NFIU also expects to report on PEP. There is also CTRs, basically saying for individual transactions or corporate transactions, individual transactions above 5 M, you're expected to report same to NFIU. So NFIU has a portal which is called the GoAML portal, where you're supposed to render such reports. Even if any of these reports that you're expected, even if nothing happens within your organization, NFIU still expects you to render a nil report. Nil meaning that, okay, for this section, maybe while we were checking for PEP within the month, we did not have any PEP. So PEP now being political exposed persons, that's individuals that have high ranking within, be it government parastatals, be it international organizations, head of multinational corporations, all those make up PEP. And why we take PEP seriously again is because because of their role within the organization, they tend to move quite a lot of funds, which again makes them very susceptible to money laundering and other vices. So it's important that any PEP, that's any political exposed person that is going to be onboarded, you need to even get senior management approval before such persons are onboarded, within the financial space, to ensure that of course, they are going to be registered accordingly, and of course, monitored appropriately, to ensure that we do not have any exposures within that space. So again, it's important because if there's any PEP within the organization, they expect you to report. If there's none, you will file the nil report. Nil report is filed on the Rapid AML, still a kind of application just like the GoAML, but just slightly different. Rapid AML is basically for just the nil reports alone. Then there's the customer due diligence, which involves the whole spectrum of the KYC processes, where you need to collect the various informations that you need. You get information from your customers, be it the ID cards, the utility bills. If it's corporate entities, you would also get the CAC document. You want to get all the directors' information and all that. So that whole bit of collecting the various informations that you need from the customer before giving them access to the financial system, as well as verifying those documents, as well as determining the kind of risks that they are going to be, that such individuals will expose you to based on being introduced into the system. So all these make up what we refer to as the customer due diligence. So there are instances where you might have to do the enhanced due diligence, maybe for high risk customers. Let's say, for instance, while you were carrying out your due diligence process, you realize that certain individuals fall into PEP, or maybe the individuals are into, or the corporate entities are into businesses that pose a kind of high risk. You need to go further to carry out further due diligence on them. If they are institutions like NGOs that we mentioned now, you would need to get, you need to ensure, aside from every document they've provided, they also provide, let's say, the SCUMU certificate from EFCC, just to show that they are well aware of AML responsibilities and they are taking same seriously before onboarding them. So the whole process of getting to know the customers you are going to, be it individuals or corporate entities, getting their document, verifying the document, determining the kind of risks they are going to expose the financial institutions to, all this process sum up what we refer to as the customer due diligence bit. And of course, there's the fraud prevention bit. So again, in some bigger institutions, the fraud team might be stationed on their own, like separately, independent of the compliance function. But the whole idea of fraud, of course, working side by side with the compliance team, is to identify and mitigate fraudulent activities. Please give me a second. Okay, so next slide. Yes, so compliance within the fintech space. So again, the only slight, again, I don't think there's any slight difference between compliance function within fintech and compliance function within the traditional bank. So yes, you might, from time to time, the whole idea of compliance is to ensure that the financial space is not being used for illicit transactions and all that. So, but for fintech, the whole nomenclature might be slightly different, and you might require more in terms of the fact that for fintechs, the compliance function might not be as large as you would have in banks. Let's say in a bank now, while I was with Fidelity Bank, for instance, we were over 60 compliance officers. So, but in a fintech, you might have, let's say, 4 or 5. So, of course, you cannot compare what you would get to do within a fintech and within a traditional bank. While traditional bank have several individuals within the compliance function manning several functions and the likes. In a fintech, you might have to wear more than one hat, as it were, and the expertise or that is required there might be slightly higher than what you would do within the banking function. So again, that's not to say that fintech is more serious compliance is more serious in fintech than bank. No, of course, banks are equally very, very serious with it. But in fintech, the expertise might just be slightly different, because you might have to be the one to manage one or two functions, and the risks that fintech would face is different from what traditional banks would face. Like, for instance, traditional bank, if you want to open an account, you probably will be expected to maybe visit the branch. Maybe now you might have your ROM bring the account opening form to you, and all that, and you need to physically write and all that. But all this is not for fintechs. There's the digital onboarding, where from the comfort of your home you can just register, and you would have access, provide the required information, and you would have access to the financial space. So that in itself, as much as it simplifies the customer journey, to gaining access to the financial system, it also has its own risks. It also has its own risks, which compliance within the fintech space have to adequately take care of. So in terms of this, you have the digital onboarding. There's also data protection and privacy, of course, within everywhere, even within regulatory, even within the traditional banks. Data protection is very, very important, because again, even in recent time, we've had the recent breach that happened with Remita and the likes, where certain KYC documents were compromised and all that. So data protection in itself has become a more serious a business. And previously, it is moved from just to just being an act in as far back as 2023, though. So meaning you could actually, it's now something that is punishable by law if you are found wanting. So data protection is also a very important bit within the compliance function. Then there's also payments regulations. As we said, within the fintechs are usually specialized in various usually have various interests. Let's say, be it FX, be it payment. So for payment regulations, you're expected to have your PCI DSS. You're expected, and again, outside even CBN expectations in terms of managing the whole payment, that's card payment function. There is also the Visa and the MasterCard rules, so they have, which are 10 card schemes. So the card schemes also have their own rules and regulations, directive as well, that you are expected, to comply with. So you might now be hearing things around chargeback. You might be hearing things around TC40, that's a Visa TC40, which is just basically talking about fraud. So meaning when you are carrying out card transactions, these card schemes expect you to monitor your chargeback ratios. They expect you to monitor your TC40 ratios, to ensure that you are able to identify merchants or customers who are having high chargeback ratios. And again, the way the chargeback and fraud ratios is calculated is usually the number of chargeback, that's the number of the transactions that the merchant initiates in a month, divided by the number of actual chargebacks that you have. So let's say, for instance, in a month as a merchant, I do, let's say, I do 10,000 transactions, and out of that 10,000 transactions, 1,000 or 500 of it is flagged as chargeback, or is flagged as fraudulent transaction. We need to take note of those ratios. The moment it is getting too high, there will be need to engage such merchants. There will be need to have conversation, and again, it might even spiral down to maybe discontinuing with such merchants if the risks that such merchant poses becomes too high. Because if your eventual ratios becomes too high, Visa specifically might even shut down access to that platform. So you don't want one particular merchant to expose you to expose you negatively in such a way that it will affect the whole ability of the financial system to be able to process transaction via Visa platform. So those are maybe like the additions that you would have within the fintech that is into payment. So let's say, for instance, the fintech is into FX now. This payment bit might not, this card scheme bit might not apply. But if you're in a fintech that processes card transaction, of course, you also need to take note of the card scheme rules in addition to the CBN expectation. So again, there's the crypto compliance. So of course, for the longest of time, they've been not so much regulations on crypto as it were. But of course, the regulators now are beginning to accept that crypto is here to stay, and quite a number of the adoption rate within the Nigerian financial space is very high. So of course, and within the regulatory space, SEC, that's the Security Exchange Commission, has been saddled with the responsibility to manage this bit. So of course, CBN from time to time would also have special obligations, as it were, for crypto, but the primary regulator now that issues license and in terms of procure in terms of give expectations as to what is expected within the crypto space is SEC. So of course, there's now crypto compliance, where it is expected that though the whole essence of crypto is to be able to process transactions anonymously and all that, before any persons have access to any kind of crypto wallet, there need to be proper KYC done on such persons as well. And there is also the set of transaction monitoring that should be done, basically to also make sure there's a kind of monitoring that goes on within the crypto compliance in terms of that. And bulk of this bit, of course, is managed within the fintech. The fintech space are the ones basically pushing such transactions. So of course, there's going to be compliance responsibilities within that space as well. Then the risk-based framework, basically, which is just managing, that's basically just giving attention to high risk high risk transactions or high risk customers, as the case may be. So of course, when you are any business you are in, you would know where your risk is more, either based on the customer type, based on the product use, based on the jurisdiction, based on geography and all that. You would know where your risk is more. So the whole idea of having an appropriate risk-based framework has to do with proper identification of where the risk is more, and of course, channeling appropriate responsibility, appropriate resources, and to those activities that has been identified as high risk or having most exposure. Next slide, please. So again, roles in compliance. So again, this is just an extension to what we've said previously, and as we've said, companies or individuals can always name this. This nomenclature is not brick and mortar, as it were. It could be called several things within the organization, but basically every organization would have to have the policy interpretation. So it could be it could even be called maybe governance and learning. It could be called maybe rules and research and the like. So it could be called several things. But policy interpretation, basically, you need to be able to understand the rules is that you need to be able to understand what the regulator is saying. You need to be able to interpret it. You need to be able to engage the relevant internal stakeholders or even external stakeholders that are affected by this regulation and ensure compliance, track compliance, take evidence of compliance, because in compliance, evidence is very, very important. Whatever you do, there has to be evidence. If you have engaged the customer, you have gotten KYC information, you've done transaction monitoring, there has to be evidence. if you have complied to a particular regulation, there has to be evidence. Whatever you do has to be properly documented. That is one of the backbone of compliance: documentation. There has to be documentation for everything. Word of mouth is never enough. Even if you have conversation with everyone regarding anything, you need to document it with an email to ensure that it can always be referred to if the need arises. So there's a team that manages this whole bit of policy interpretation, and as well as also ensuring that the whole aspect of it is properly managed and safeguarded. Then the AML analyst basically could also be, let's say, transaction monitoring person, or it could also be so basically for AML analyst, your bit is to ensure that the whole system put in place to ensure that the monitoring of transactions is stable. So it could also be called transaction monitoring in other institutions. I'm just stating that so in case you see a different naming somewhere else, you don't get confused by it. But the whole idea is that every compliance function borders around around this. For KYC analyst, that basically KYC being okay, AML being anti-money laundering. I hope we have gotten that already. Then KYC being know your customer. So KYC analyst basically would be the person is the role in compliance where you have to receive documents from customers, be it individual customers or corporate customers, and also verify. It's not just enough to collect. Customers can, these days, even with the advent of AI and everything, you don't even need to have technical skills, maybe courageous skills or whatever, to be able to manufacture documents these days. Just with AI, people can come up with all sorts of documents. So any document you get, you need to verify same. If customer has given you an ID card, let's say international passport, driver's license, NIN, whatever the case, there's need to verify. And of course, there are tools that is expected that the compliance function would have to be able to carry out those verifications properly. So the KYC analyst basically ensures that we get all documents. So because the document I might collect for a company that is an NGO now is different from the document I would expect from a company that is into, let's say, payment processing. Why for an NGO, I might be stressing, or I want to see your incorporation document. I want to know the trustees you have. How do you manage the funds you get? Where's your SCUMU certificate and all that? For a company in payment processing, I would want to look out as well, of course, get the whole incorporation document, the director's ID and all that. Then, of course, you also want to get what's the PCI DSS license. If they have that, is it still valid? When was the certificate issued? If it's still valid within the quarter, you want to know if they have appropriate visa certifications and the like. So the documentations you would get for certain individuals vary based on their business, based on what they are seeking to do with the institutions where you work in. So the job of the KYC analyst is basically to ensure that any individual, any corporate entity coming to coming to on board or coming to gain access to the financial institution, we get all the appropriate KYC information on such persons and ensure that they are complete and they are also verified. For the risk analyst, basically, the risk analyst, again, depending on the institutions that you're in, it could border down to just maybe the compliance risk assessment, where for every partnership request, for every product, for every service that a company wants to onboarding or wants to engage in, rather, there has to be proper compliance risk assessment on such partnership requests, on such product before embarking on same. So again, this risk analyst bit can also expand to the entire risk function generally. So to involve maybe other prudential risks as well, talking about stress testing, talking about credit risks and the likes. So the risk analytics function, depending on the organization, would border around that. Then regulatory reporting, which we've said, again, has to be the role responsible for managing the regulatory reports to the organization, to the various regulators. So again, because this reporting is usually, of course, there are also some daily reports that you are expected to be to render as well. Let's say if you are within the IMTO space and the likes. So because these reports at times are occasional, these in as much as there might be a standalone team that does regulatory reporting, they might also be saddled with other compliance function as the organization may choose. But the regulatory reporting bit would be the team within the compliance function, basically saddled with responsibility to ensure that all reports are sent as at when due. For example, for monthly reports, CBN expects that you send those reports before the 5th of the following month. So meaning if I want to send January reports, for instance, I need to ensure that I send it before 5th of February. So that basically is what. So this team basically is saddled with that responsibility. So for every report, be it to CBN, be it to NFIU, even if it is not a compliance generated report, because there are other reports that maybe the finance team, for instance, even HR, for instance, might have to render. The regulatory reporting bit saddled with that responsibility to make sure that the compliance report goes out, and reports that are also managed by other institutions, other teams within the institution, they are also sent. And of course, they as well will be the one to document this evidence. So they will make sure that, again, as I said, evidence is very, very important in compliance. As the popular saying go, if you do something and you don't have evidence for it, as the saying in quote goes, you explain, tire, no evidence. So you need to make sure there's evidence, because that is the only way the regulator would when they come for risk-based audit, or even maybe not even the regulator, from time to time it's expected that you also audit the compliance function. So you might have external auditors who want to come to test the efficiency and the efficacy of the compliance function. You need to be, these evidences that when you present them, would be able to know that you actually did what you are expected to do. So these are the various roles, as it were, within the compliance function. So of course, these roles could be broken down into several bases, because in a compliance team, for instance, you could have, let's say, maybe in a traditional compliance setting, traditional now being in a bank setting, you could have up to 5, 6, 7 teams, separate independent teams within the compliance function. And the whole spectrum of activities that are expected to do borders around all these bits. Then as well, but when you come to the fintech setting, as I said, because the most fintechs might not have a very robust compliance team, you would have to wear several caps. So you might find out that maybe the person carrying out KYC is the one also doing transaction monitoring, or the person doing the risk assessment is the one also doing KYC, as well as also doubling as doing the reporting. So again, all this is usually based on scale, is based on size. What would influence the compliance function is the size of the organization, the kind of transactions they are doing, the number of transactions they are doing, their customer, the size of the customer base. All these would influence what the size of the compliance function would look like, so that it can be appropriately managed. So now talking about the cardinal points of compliance. So the 4 points encompasses of every compliance professional. Prevention stops the problem before they start. Detection expect that you catch them early. Monitoring ensures that nothing slips through over time. Reporting ensures accountability to regulators and management. As we go on in the subsequent slide, we'll take each of it one by one. Yeah. So for prevention, has to do with those set of activities, that you put together to ensure that you are able to prevent problems before they start. And one of such is the risk assessment. Risk assessment, as I've made allusion to in previous explanation, has to do with you assessing the kind of risks that a particular individual or a particular entity would pose to the financial system before introducing them to the financial system. So you need to know, maybe for example, the kind of risks that a student, let's say a student now who is going to be receiving maybe pocket money from the through his account, let's say maybe 50,000 or 100,000 on a weekly basis or monthly basis. The kind of risks that person will pose is different from the risks that is going to be posed by a political exposed person, for instance, that will be raking in hundreds of millions. So the whole idea of risk assessment is to be able to itemize and properly risk rate the various individuals or entities that are seeking access, which would, of course, inform how then you would continue to monitor their activities. So the risk assessment bit is a very important function in the prevention spectrum. So because you need to be able to properly assess the risks for you to know how you would channel resources, channel responsibilities to monitoring the activities within the various individuals or corporate entities that are seeking access to the financial space. So then, of course, another very important bit of prevention is policy development. There has to be policies. Where there is no policy, where there is no law, there is no offense. So there has to be policies, and not just documented policies that every member of the organization properly understands them. There's something called the 3 lines of defense, where it is expected that everyone within the compliance function, within the organization is responsible for compliance. So while compliance team in itself would be the one to manage and ensure, everyone has that compliance responsibility. And that's what the 3 lines of defense is trying to talk about, in terms of the first line being, let's say, operations and all that. Operations, the market facing, or the marketing team, or the customer facing team, they need to understand what their compliance responsibilities are, because they are the ones who are the first line. They are the ones who would meet the customers. They are the ones who actually know these customers. So there have to be policies in place that ensures that this set of individuals within the organization understand what their obligations are. And policy development would enable that. So it shouldn't just be written, it has to be known within the organization. So, of course, just to complete the 3 lines of defense, the second line being compliance, control, risk management, fall into that bit. We are the ones who would have to interpret the regulations from time to time, ensure that they are being done as they are stated down. Of course, there are rules and regulations that will be put down. There are procedures that will be put down. It is the second line of defense responsibility to ensure that those procedures, those SOPs, that are standard operating procedures, are properly adhered to. And the third line of defense being the audit function. Audit basically just comes to audit, to kind of check the fact after it has happened, to ensure that, okay, in your policy, you have said you do this and do this and do that. Audit will then come to say, okay, did you actually do this and do this and do that as it is stated in your policy? So that's what the 3 lines of defense seeks to achieve. So while the first line is expected to know their compliance obligations, the second line is expected to always provide clarity where there's any ambiguity. Then the third line of defense would always make sure that the processes are being followed as they have been written down. So policy development is very, very important in the whole spectrum of prevention. And employee training. So of course, from time to time, you would observe there's always going to be knowledge gap. There's always going to be knowledge gap in the sense that the first line of defense may not want to take compliance seriously. They may just feel, oh, compliance is the responsibility of compliance. So, but there's need from time to time to always remind them that compliance is everybody's responsibility. And of course, where you observe knowledge gap, maybe based on some control lapses, based on some incidences that you've observed within the organization, you then have to carry out employee training from time to time so that you can cover those knowledge gaps. You can provide clarity when there's any ambiguity and the like. So that again helps in the whole prevention space, because you have to have conversation from time to time with the front line. As you said, they are the ones who know the customers. They are the ones who interface directly with the customers. So they are the ones who can tell you the kind of the actual risks they are exposed to, exactly what they are seeing in the market. So then the compliance, the control, the risk management function can advise appropriately how to navigate such experiences. So employee training, employee interaction, conversations from time to time is a very important aspect of prevention. Then access control. So of course, access control is very, very important, because for every organization, there are various tools that you use that enables the adequate functionality of such. So you need to ensure that people have access to only what they are expected to do. And of course, that also brings in the idea of maker checker. There has to be a maker and there has to be a checker. People, you can't just grant access generally to everyone. So let's say, for instance, there's a tool that has been brought for approval of transaction. Not everyone within the organization is expected to have access to such tool. Only specified individuals who have the technical know-how, who are aware of the risks involved with having such access, and to be able to act accordingly and all that. So access control is also a very important prevention, because if everybody has access to it, to let's say, to approve transaction or to let transaction fly, of course, there's going to be a whole lot of abnormalities or a whole lot of illicit transactions going through the system. So access control is a very important bit of prevention. So in terms of detection, when we're talking about detection, we are talking about systems that will enable you detect when something goes wrong, because no matter how good your preventive controls are, there could still be chances of a breach. So there has to be appropriate detection in terms of transaction monitoring system, in terms of automated alert generation. So let's say something, yes, you have put in the initial controls, policies in place to make sure that you monitor transaction. You have also gotten a very beautiful transaction monitoring tool, to act as a control mechanism. But then there has to be the detective bit in the sense that if any abnormally, or if any illicit transaction is about to pass through, if something abnormal is going on, there has to be appropriate way to generate alert, to monitor these transactions, and to ensure that they are reviewed and escalated appropriately, so that appropriate actions can be taken. So detection has to do with all that bit, and detection could spiral from, just individual detections from bare transaction monitoring and the like to more elaborate function that affects the whole company as a whole. Like, for example, the periodic review audit. When you are auditing, which is the third line of defense, you need to be able to understand if the preventive measures that you've put in place, are they really doing what they are expected to do? The only way you can know that is through audit. If you have put in a control, for instance, to ensure that, no customer, let's say, for instance, if you for example, CBN said, if in terms of this device change and all that, that you shouldn't be able to have access to your bank application on more than one phone. Let's say use that, or let's just use the example of a new customer that is just onboarding on the banks or the financial institutions platform. It's expected that, let's say, you put in a control of the person shouldn't be able to do more than 20,000 for the initial first transaction. So even if you have put that control in place just to manage fraud in case of if customer loses phone or something and it's a fraudster that is doing it, so that you just minimize the amount that the fraudster can have access to. Let's say you've put that control in place. There is need to be able to still detect, to be able to check that is this control actually doing what it is meant to do. You then need to check the list of customers who just onboarded. You need to see, okay, this customer just onboarded by this time. The very first transaction, was he able to do more than 20,000? If he's able to do more than that, you need to be able to, detect and know where the fault is coming from. Was he a system glitch? Was it just to figure out the scenario that may have allowed that to play. So detection is very, very important in terms of establishing that the controls that you've put in place are actually doing what they are meant to do. Then periodic audit, of course, which talks about the broad spectrum of making sure that the whole compliance function as a whole is doing what is meant to do. And again, audit is not only for compliance. They could audit the company as a whole. They could audit a particular department. So compliance itself can even decide, or compliance, or in collaboration with control, can decide to audit, let's say, the finance team, for instance. You want to figure out, maybe, is anybody stealing money from there? Are they actually processing transactions as they should process it and all that? So in the same vein, that other teams within an organization could be audited to ensure that the preventive controls that have been put in place are adequately followed. The compliance function as well can also be audited to ensure that, okay, this transaction monitoring, are you guys doing it properly? The KYC you are meant to do, are you doing it properly? Your risk assessment, are you doing it properly? Your regulatory adherence to policies and all that, are you? What mechanisms do you have to check for the various circulars that are being released? What mechanisms do you have, to monitor compliance and track compliance? Do you report as at when due, or do you report after the deadline? Things like that. So yeah, the audit is also important to show that, so that if there are any lapses, if there is any shortcomings anywhere, it can be remediated and it can be corrected. So of course, there's also behavioral analytic tools that could also be used in terms of detection. Next slide, please. So in terms of the third cardinal point, we also have monitoring. So there's monitoring, which has to do with ongoing transaction oversight. So the process of compliance check, behavioral patterns tracking, regulatory change management. So monitoring, of course, goes side by side again with the previous bit where we've talked about, where we say ongoing transaction oversight. There has to be oversight. So the detective bit and the monitoring bit go side by side, in the sense that you always need to make sure that every transaction that passes through the system are adequately monitored. You have oversight over them. So of course, you may not be able to physically monitor everything with your naked eye, which is where transaction monitoring tools come in. So again, there are even instances where people have inbuilt transaction monitoring tool. So be it using a third party, maybe you have a third party who does the transaction money, who you are leveraging their application to do transaction monitoring, or the transaction monitoring is an inbuilt tool, whatever the case, you need to be able to monitor transactions that pass through your system. There has to be appropriate rules to ensure that any transactions that fall within the category of the rules that have been embedded within the transaction monitoring tool are brought in for review. So again, where you as a compliance person come in is you need to be able to review those alerts appropriately, because there's something we call false positives. False positive in the sense that you have set a rule. You have said if uh, let's say for instance you have set a rule that if any individual appears to be a sanctioned entity. Let's say someone who has been flagged by, let's say, the United Nations or even the Nigerian Sanctions Committee, for instance. Let's say an individual has been flagged. Let's say, for instance, let me use my name as an example. Let's say OSAS has been flagged for terrorist activities, and that, of course, has been embedded within your monitoring tool to ensure that if OSAS tries to do a transaction, you should block the transaction, or you should not allow the transactions to go through. So when OSAS then initiate a transaction and it flags that transaction, you as the compliance person, you need to review that transaction to be sure that this OSAS that is initiating this transaction is the same OSAS that was flagged. So you then need to check. You check this. You check the details of the person initiating the transaction. Where was he born? The date of birth, the country of residence, and all that. Look at that side by side with what was flagged. If it's the same, then of course you need to block. If it's different, you release it. So the instance where a rule flagged a transaction, but after you have checked it, you realize that is different. It's not necessarily what it was meant to be. That's what false positive talks about. You have set a rule that anything that falls within this parameter, bring it for my review. But after you review, you now see that it's not necessarily so. This transaction is totally different from what the rule is talking about. Then you release. So the review process, that ongoing transaction oversight, and that review process is also one important function within the transaction monitoring space. So, and of course, the ongoing transaction oversight is important. There has to be process compliance check and behavioral pattern. So for the fourth cardinal point being reporting, there has to be reporting. As we've mentioned previously, there is the suspicious activities report that you have to render to NFIU. The CTR, that's current transaction report, also to NFIU. There's usually internet escalation procedure. So let me just touch a bit on suspicious activity report and suspicious transactions report. So for transactions report, of course, there's a whole spectrum of activities that could necessitate filing of suspicious transactions report. So there's STR, suspicious transaction report, and there's also SAR, suspicious activity report. So why suspicious transactions report has to do with the actual transaction. So let's say transactions are involved. For suspicious transaction report, transaction must be involved. There must be a transaction or a set of transactions involved which you are reporting. So maybe customer has initiated several set of transactions that appear suspicious. Let's say customer receive several people are sending to this customer, and the moment he gets money from, let's say 4 or 5, let's say 50 to 60 people, he moves it to one other account, and that same pattern continues on and on. So that is one example of what can necessitate filing of suspicious transaction report. So for suspicious transaction report, actual transactions must be involved. But for activities report, actual transactions may not be involved. One very good example that even comes to mind now is while I was with UBA, there was one request that came, and I'm not even joking. This is a real request. Actually, someone visited the branch and said he wants to change his name to Barack Obama. I can't remember his exact name. Let's say someone, let's just say Emmanuel now. Emmanuel Anelechi just wakes up in the morning and says, oh, he wants to go and change his name to Barack Obama. And when we asked, okay, why do you want to change your name? He said it was a directive from God. I'm not even joking. I'm 100% serious. It happened. So that kind of activity is a very suspicious activity. And of course, the request was declined. So, but it's not just enough to decline. You still need to report such activity because you want to understand why Emmanuel all of a sudden wants to be named Barack Obama. And you will be surprised that in some institutions, some people might be able to even go ahead with it. And I know there was an instance one time where one of the P Square brothers also came up online and was saying someone has an account in their name, something P Square, and is defrauding people with it. So again, those kind of activities has to be reported. So first, you even need to even question how did someone go to use such a name, P Square, and it was approved, and the account was opened, and the customer was not even receiving, transactions on it. So for that type, you can see transactions has been involved, also activity has been involved. So just to put more context to what suspicious activities report is about. So key skills that are needed for compliance professionals. So from everything I've been saying, you tell that you need to be analytical, because the people you need to be analytical. You need to be able to think on your feet. You need to always have that conscious mindset to make sure that you are very analytical. So again, previously you would see that maybe some compliance function, they may want to attribute it to maybe you being a lawyer. Again, as I said, yes, you studying law maybe is good and would make you be able to fit in properly to, let's say, the regulatory bits where you need to interpret laws, interpret regulations and all that. But much more than being a lawyer, you need to be an analytical thinker. As a matter of fact, your analytical thinking would even take you far than being a lawyer. Don't get me wrong. Law is a very good degree and is very, very important within the whole compliance space. But even you that is not a lawyer, I talking with you, I'm not a lawyer, but I've, by the grace of God, have grown within the compliance function. So analytical thinking is a very, very key aspect within the compliance function. And you also have to have attention to details. You need to be able to read in between the lines. You need to be able to look at documentations and see that, oh, there's something off here. You need to be able to assess the kind of risks that a customer would pose. That boils more towards analytical thinking. You need to always be analytical, pay attention to details, know exactly what is this customer seeking to do with us, what is the use case that they want to get in terms of having a relationship with your financial institution. You need to pay attention to details, pay attention to KYC document, pay attention to transaction monitoring rules, transaction monitoring alerts, so that you don't just go and release transaction thinking it's a false positive, whereas it's a true hit. You need to pay attention to details when you are sending regulatory reports, because you can't afford any mistake. You can't afford to render wrong report to the regulators. So attention to detail is a very, very, very important component of the compliance professional. Then you of course have to have regulatory knowledge. You need to always constantly read up on regulations. You need to constantly read up on global best practices. So if you are the type that have said, oh, I'm out of school now, I'm no more reading, or before I will read, they will do this or they do that to me. Maybe this function is not for you, because you need knowledge. You need to, and for you to gain knowledge, you need to read, you need to participate in seminars such as this. You need to participate in compliance to gain expertise, or to gain knowledge from various experts across the globe. Regulatory knowledge is very, very important, because it's only what you know that you can enforce. If you don't know it, there is no way you can explain to the first line of defense when they come to you. Because if the first line of defense comes to you and says, oh, this customer doesn't want to bring KYC documents, or they don't have a utility bill, or they don't want to bring ID card, or they don't want to bring BVN, they don't want to submit this, you need to have regulatory knowledge to be able to advise the first line of defense appropriately. You also need regulatory knowledge to be able to even carry out your own function appropriately, so that you don't do any mistake along the line. And of course, communication skill, you need to be able to communicate. Communication is very, very important, because you are going to be talking with regulators, you're going to be talking with the first line of defense, you're going to be talking with management to explain compliance responsibilities, you are going to be talking with your colleagues. So communication skill is important. You need to be able to explain your thought process. You need to be able to explain what the regulator expects from time to time. So communication is a very, very important skill as well. And ethics, of course, you need to be of the highest ethical standard, because you are supposed to be the compliance champion, you're supposed to be the ethics champion. If you're going to be telling the next person that I expect you to be ethical, you yourself have to be ethical in all your procedures, your behavior, even in and outside the official work function. So yeah, then talking about compliance career path. So of course, there's the entry level bit where you can be asked to do any kind of, so depending on where you find yourself, you could be assigned any kind of function. Okay, again, one important function that we probably did not mention on the slide again has to do with responding to regulatory inquests, because from time to time you would have regulators like EFCC, like CBN, even CBN, the police, NFIU might be needing certain information on the customers within your organization. So maybe they could be requesting information such as account opening documentation, which is the KYC you are expected to have collected before giving access to any individual or any corporate entity. So, they could also be asking for transaction details. Maybe they have reviewed statement of accounts, and the beneficiary details of certain transactions are not clearly outlined. They may want you to come and explain who the beneficiary of certain transactions are. So from time to time, you get such requests as well, and compliance also has responsibility to provide responses to the regulators or the law enforcement agents, as the case may be. So, and why that came to mind now is that it's usually a very a whole lot of entry-level roles might evolve around that, especially in traditional banking, because just for you to have a hang of what the compliance function is, first of all, you usually just like to push a whole lot of entry levels there. So that's why that came to mind. That is also one of the roles within the compliance function. So, but back to compliance career path, there's the entry level role where you come in and you have to do the basics. Of course, at this point, no one is going to give you anything technical. It could just be preparing these letters and responding to regulators and law enforcement. It could just be checking KYC. Of course, you'll be given a document template or a document checklist for you to check. Maybe for each customer onboarding, you might say, okay, you need to check that there's utility bill, check that there's this, check that there's that. So just basics such as that would what entail the entry level role. Then from the entry level role, once you've done that bit, again, depending on how the organization is structured or the speed and the likes, it could be for a year, it could be for 6 months, it could even be for 3 months. So depending on how well the individual picks, we can then move to the compliance analyst, where at this point you now understand more than just the basics. You are doing a whole lot more than just the rudimentary aspect. So at this point, you could be the KYC analyst, you could be the AML analyst, you could be the transaction monitoring analyst. At this point, you could be any of those functions. But of course, just the one who would be, let's say, the maker, for instance. And when we're talking about the senior analyst, of course, if you've spent a while there as well as a compliance analyst, you then move up to to the senior analyst, where it's expected you have developed quite a number of expertise, you have learned, you have grown, within the team, and you can now kind of lead reviews. You can now kind of monitor the activities of what the compliance analyst and the entry level individual is doing. By the senior analyst, you're already, more or less like a lead in the sense that you are giving directives to entry level. You are trying to make sure, guide them in the right paths and guide them to make sure that they know what they're expected to do. And of course, still monitor the function. Then when we are getting to the compliance manager, at this point, you are beginning to own the function as a whole. Basically, you are managing the compliance function. Your role at this point is to manage the various aspects of compliance. So again, where you might have one or two, again, as we said, there are several functions within the compliance function. So for the compliance manager now, you then be managing, depending on the size of the organization and all, you might be managing the entire compliance function, or maybe an aspect of the compliance. So maybe, for example, in a bank, you could be the manager for monitoring of transaction. You could be the manager for due diligence and risk assessment. Well, let's say in a fintech, for instance, in a fintech, you probably will have only one compliance manager who is expected to manage the whole spectrum of the compliance function. Everything within the compliance function, it's expected that you have one or two analysts, senior analysts underneath that the compliance manager would make sure that every bit of the compliance function is going as it should be. Then the head of compliance, which could also be termed the CCO, that's the Chief Compliance Officer, who is the one who has the utmost responsibility to make sure that the compliance function is going as it should be, and also advises the board, engages various regulators when they come to carry out audits, or as well as external auditors when they come on board. So in terms of key certifications that we have within the compliance function, what is usually termed as the gold standard is CAMS, which is the Certified Anti-Money Laundering Specialist, because of, and this is so because of his multi-jurisdictional and is accepted worldwide. Same with CFE and ICA and CFCS. So these are like international organizations that you can even use outside of Nigeria. So why CAMS? CAMS basically is about Certified Anti-Money Laundering Specialist, is the gold standard for the compliance function. So it borders a lot on anti-money laundering. For CFE, which is a Certified Fraud Examiner, CFE talks more on fraud investigations. It also has bits of compliance in it, so it's also very relevant within the compliance function, because I know CFE would they have 4 modules, I think, investigations and like, where you would where you'll be assessed on. So CFE is also, as much as it's tweeted a lot more towards fraud investigation, is also very relevant for the compliance function. So ICA is International Compliance Association. It is also similar to CAMS. Why CAMS is more of an institution backed from the US. ICA is from UK. So, but both are internationally recognized and can be used across multiple jurisdictions. For the CFCS, which is the Certified Financial Crime Specialist, is also an international organization that also does more on. So for CFCS, it is more towards it is treated more towards financial crimes as a whole. So it talks on a combination of both fraud investigation, both compliance, both cyber security and the like. So it touches quite a number of subjects. So again, then there's the CRMP, Certified Risk Management Professional, and there's DCP, which is our homegrown Nigerian certification, which is a Designate Compliance Professional, which is issued from the Compliance Institute of Nigeria. So for every compliance professional, if you are going to come into the compliance function, it's expected that you at least have DCP, because in terms of cost, it might be is the cheapest here, because of course you are going to pay in naira. Like for CAMS now, for instance, you're paying in dollars. CFE, you're also paying in dollars. ICA, you're even paying in pounds. So you are paying in pounds. CFCS, you are paying in dollars. So for DCP, you are paying in naira. So I think is probably the cheapest here, and that does not in any way mean that the curriculum is not important. It is equally very, very important, and it is expected that anyone who is going to come within the compliance function, at the very minimum, has the DCP certificate. So why you should choose compliance is globally relevant, as we've mentioned. As we mentioned previously, you've seen the notification to mention it is important globally. There's something even called the FATF stand recommendations that it's expected that several institutions across the globe follow. Compliance basically manages how those recommendations are trickled down to the very existing of the financial space. Similar to the FATF, there's the Wolfberg questionnaire that you also have, that influences due diligence, that influences risk assessment from time to time. So yes, in terms of global relevance, it means that and while we have recommendations and global recommendations that cut across multiple jurisdictions, that you trickle down, that you can use internally for your day-to-day activity, it means that your skills and your work is also relevant across the globe, anywhere you find yourself. So of course, there might be need for you to now to further specify in terms of having the knowledge base of what the regulator expects in such jurisdiction, but the overarching guidance that manages the compliance function, your skill and the knowledge here is going to be relevant anywhere within the world. So again, for career growth, there's always career progression within the function, because it is ever evolving. There's impactful work. Of course, you know that the work you are doing affects the organization directly. It affects the organization's posture. It affects the organization's reputation. It affects how the regulator perceive, how the regulators and even investors and the general public perceive the institution. So it's impactful work, it's relevant work, it's work that that is actually very, very meaningful. And of course, the skills are transferable. the skills you get from compliance in terms of having attention to details, being analytical, being having that investigative mind to be able to investigate transactions. They are transferable skills that are relevant in any industry that you find yourself. And of course, there is also job security. There's job security because the compliance function is always going to be relevant. So yeah, in conclusion, we're saying compliance is a critical function that safeguards institutions and economy. So because yes, as we've said, as much as we safeguard institutions, we are also safeguarding the economy in the sense that actors who are involved in, let's say, proliferation financing, that are involved in tourism financing, in things that can affect economies, it's our function to ensure that we frustrate the activities of such. And when we have international global organizations such as the FATF that is providing recommendations, it is also recommendations that countries are expected to adopt. I'm sure we are familiar with Nigeria exiting the grey list recently, based off of recommendations from FATF, which we were found to be deficient in, and they now then brought up remediation plan, which we then followed through on, which led to the exiting of Nigeria from the grey list. So you can see that your function, that little function that you think, that so-called little function you are doing as a compliance officer, trickles down to how the country as a whole is perceived in international standing. So it is a very, 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 very critical function that safeguards institution and also safeguards economy, because the FATF rating, that's the us exiting the grey list. Of course, it would help how the Nigeria economy would be. How the economy will be viewed globally, how it will be viewed internationally. Because while we were on the grey list, countries on the grey list usually would go through enhanced monitoring when you are trying. So anything you're trying to do globally, whether you're trying to process transaction effects or you're trying to send goods and services here and there, because you are on the grey list, individual countries are advised to treat such transaction with extreme caution. So, but exiting the grey list will mean that the economy can be treated more better, in the sense that the function of the compliance has helped to trickle down how Nigeria as a whole is being viewed. So compliance is a critical function, that safeguards institutions and economies. And I implore everyone to, I hope this is able to spur your interest in it, to know that it's a very serious function. You need to pay attention to it. You need to be interested in regulations. You need to pay attention to development. You need to self-develop yourself from time to time, because you may not necessarily get the chance to have someone to sit you down and always tell you everything. Of course, there's no one lecture that can explain every bit. You would also have to put in your own personal effort and ensure that you do it appropriately. So thank you very much, everyone.
Thank you very much, Osas. Can we just say thank you to Osas on the comment section? He did extremely well. I want us to just appreciate him with maybe a love emoji, a clapping emoji, something to say thank you to him. This was an exceptional performance. We appreciate your time and your knowledge. Osas has worked in decades with financial institutions spanning from both the traditional bank down to the fintech, and I assure you he's one of the best qualified candidates to have taken us this course. Not just worked in traditional bank, he worked with UBA down to Fidelity Bank and to several other fintechs like Payazar and Alliance Pay and so many other places. So he's also a certified fraud examiner. So he has the license or the certification in certified fraud examination. So it's a should I say, it was an honor to have him speak to us this morning, and we really appreciate that. Thank you very much. So we have so many questions in the comment section, and the first question we have is from Obianuju. So she said, please, since association accounts require SCUMO, are they classified as high risk? So would you mind taking the question? I take it.
Sorry, can you come again with the question?
She said, since association accounts require SCUMO, are they also classified as high risk?
Association accounts. Okay, yes, of course. So again, they fall into the categories of companies that we call DNFBPs. That's designate non-financial businesses and professionals. So yes, so it's expected they get SCUMO, and they are classified as high risk because of the set of transactions that could go through them. So of course, maybe you doing your small, or no, okay, maybe not too small, maybe you doing your secondary school stuff, as it were. That you might think maybe that is not high risk as well, because you guys just want to have a little association to just do something little. There's no risk whatsoever that looks like that could pose. But then again, the problem with such is that you could start raking in money. Maybe, for example, you guys might say, oh, let us crowdfund for somebody, or let us do this, let us do that. Those are avenues through which terrorist financing actors can exploit to carry out their enterprise. So while every association might not necessarily pose the same set of risks, the singular reason that it is a very good avenue for terrorist actors to exploit makes it a high risk. So of course, which is one of the reasons why CBN is saying we need to know how to we need to have the synergy between KYC and transaction. So after I have known at onboarding that, okay, you are into association, what kind of transactions are you doing? If you are doing little or minute transaction, again, there's no much risks again in that bit. But by the time you start passing heavy transaction, the risks then begin to come up. So we need to then understand, what are you people always contributing for? What do you need? What do you do with the funds? And blah, blah, blah. Who are the investors? Who are those contributing? Are they set members? Are they what are the deals used for, and all that? So that is what. So it's not that is what makes it dynamic. You just need to understand that perspective as a whole, as opposed to just having a one-way thought about it. You need to broaden your mind and always see it from the larger picture.
Okay, thank you very much, Osas. Just to add to what Osas has said too, if we look at the CDG regulation, though the CDG regulation 2023 did not specifically state that associations are high risk. However, if we look at the regulation, section 5 and section 6 of it, it specifically pointed out that during your due diligence review, making reference to recommendation 8 of the recommendation, it says when you're doing your due diligence, you should apply risk-based approach. And when this regulation was further interpreted, it talks about you classifying all association, all society, and all DNBPs, all association and rather societies as NPOs. So yes, according to regulation, according to AML CFT regulation, according to CDD regulation, and according to FATF recommendation, associations are classified as high risk. So the next question after that is from is from King. So King says, "Hi, please. I'm a customer revenue reconciliation officer in my current bank where I reconcile and review customers' transaction across the bank nationwide. Can you give us a plan to enter compliance?" Okay, just this is a straightforward question. So just like he mentioned, so for you to switch from maybe customer service or internal control or other departments to compliance, like he said, you have a career path already which you have started, but you wish to switch to maybe compliance. First thing first is for you to be able to embrace yourself or equip yourself with the knowledge of regulation, which is number one. And to make it easier for you to switch is to also do something like a certification, like the lowest that we mentioned during the training or during the sharing of the slide was DCP, Designated Compliance Professional. So once you're able to get this, it gives you an edge to say that, yes, there is commitment from your end to say that, yes, this is what you want to contribute to compliance and this is what you want to do. So once you're able to gain DCP, it also gives you more platform to assess people who actually makes this decision, and you being added to the designated compliance professionals WhatsApp group or any group as it may be, it also allows you to see more opportunity and all that. So that being said, even without the certification, can you switch? Yes, you can switch. So all you need to do is look out for the opportunity and maybe using your LinkedIn, for instance, you can reach out to me. You can also reach out to OSAS, and if there is any opportunity, and I promise it will be shared with you. Thank you very much. So you can reach out to me on LinkedIn. My name is Emmanuel Anilechi. So you can reach out to me on LinkedIn. That is my LinkedIn name. And you can also, the mails you got, you can also see my WhatsApp number there. So you can always reach out to me via my WhatsApp for more inquiry. Then we have another question from Adebayo Unidalapo. So he said, how do compliance analysts stay current on regulations? Sas, would you want to answer that?
Okay. Yeah. Okay. Well, I thought we were going to take that. So yeah, to stay current with regulations, yes, is so again there are various avenues that you need to have. CBN from time to time puts various circulars on their website. Yes, there might be talks around conversation that the websites may not be updated every time, but for most of the time, they try to also put those directives on their website. So there's a CBN website which captures every circular or a good number of circulars that CBN releases from time to time. And again, it's also important for you to also have be member of various channels. Like for example, the DCP now, if you register for DCP, you'll be added to a WhatsApp group where from time to time there are compliance conversations. People even ask questions that are general compliance questions and they get answers. So, and on such platform as well, they also share CBN circulars and CBN laws and regulation and the case. So that is why it's important to also have certifications such as that. I know there is such group too for CFCS. I'm sure there will be same for ACAMS and CFE and the likes. So having such certifications would make you be in a kind of a network of network of individuals where
where there are like minds, so you can always get access to such information. Then there's also LinkedIn's that you can connect with. I know there's one Reg Alert. Uh, I don't know if it's managed by CBN or not, but it has the CBN handle and the likes. There are also several channels like that. So be it WhatsApp, be it LinkedIn, be it CBN websites, there are various channels just where you need to stay connected, and even where they are asking questions that you think you might not need at the moment, you can learn from it and still gain knowledge that might be relevant for you in the future. So those are the various channels through which you can get. And again, any institution you are in, it's expected that the chief compliance officer would have a kind of relationship with the regulator. So CBN would have the email of the chief compliance officer. So if there are circulars or directives from RISE from time to time, they also send to the email of that chief compliance officer. So it is now the responsibility of the chief compliance officer to ensure that it trickles down to the organizations. But all these I've mentioned are the various channels and avenue through which you can stay updated.
Okay, thank you very much, Osas. He did very good justice to that. I've also communicated the website, the website of the Central Bank of Nigeria, so you can always go there and check on the circular part. And also to add to that, there's also what the CBN refers as a draft. So this draft is usually released on the same website, and stakeholders are allowed to make comments. For instance, at the beginning of the training, I mentioned about a draft on immediate airtime field reversal. So that airtime reversal was released. The draft was released in February, I think 18 or thereabout, I can't remember. And every stakeholder is required to make comments. So this comments is saying, how can we resolve it? Is this okay by you guys? Can this be initiated? How fast can we go on with this? So once every stakeholder has made comment on the draft, it goes on to be passed as circular. And once it's passed as circular, that is when it becomes a regulation. That is when it becomes a law. So yes, for every compliance person, every compliance analyst, you are required to stay in line with regulation through continuous visiting of the CBN websites and other regulatory body activities, so you can always stay in line. And also, if you're in the fintech space, there is a platform for fintech association where you are required to be. So time to time, information are passed on the on the fintech association platform, and that also serves as part of the ways that you can stay abreast with the regulation. Thank you very much. So we have another question. He said from Kings again. He said, can we have like a course to intern them full? I think here he's requesting for maybe, is there a way that they can start a course as intern in maybe a financial institution, then and become a full staff? Yes, many traditional banks takes interns in form of contract staff, and just the only difference is, as a contract staff, you will not be paid highly as a core staff. So you might be paid very very low, to the minimum of maybe 150,000 naira as a contract staff, while a core staff at the entry level can be earning up to 500. So whether you can get such offer, yes, you can start as an intern and grow your function to a full staff and to a full role rather, and become a full-time compliance officer. So where can you get this? Possibly, I think that is also what you were asking of, is you can always get this from maybe open roles, through personal relationship with people who are in internal, because yes, financial institutions don't announce such rules. They barely announce such rules, but you can always get internal sourcing through a relationship with who you know maybe inside the organization. And it is always easier for you to join as a contract staff to many commercial banks. Okay, there's another question here for compliance. He said there, for a compliance analyst who is just starting up with zero knowledge in fintech, what are the steps to be successful in the role? Okay, so for me, the steps to be successful in the role is the analytical skills that he had mentioned. So let me just take you back to the slide. Apologies on that. So these skills are very, very much essential for you as a compliance person. First of all, ability to pay attention to details. So you must be able to differentiate between the good, the suspected, and the bad. So if you're looking at transaction as a compliance person, you're not looking at the transaction like an operation person will look at transaction. As an operation person, operation officer is looking at every transaction as revenue. They are looking at it as an income. But for you as a compliance person, you are looking at every inflow as suspicious transaction that could actually escalate or your function as a compliance officer. Every 1 naira that goes into the organization is suspicious until proven otherwise. So for you to be able to succeed in compliance is one, develop your analytical thinking capacity, be able to pay attention to details, look at this transaction, ask questions upon questions, even when you know that yes, this is right, still find a way to be sure that you are convinced. I work as a driver, but I'm receiving money from Manu. Why are you receiving money from Manu? That is my salary because I supplied goods. What kind of goods did you supply? You should be able to question every details of your customer. You should be able to question every inflows that goes into your customer accounts to be sure that you are satisfied. It is until when you are able to ascertain that, yes, these transactions are genuine, that you can be able to let go of that transaction. But where the responses of the customer is not aligning, it calls for more investigation, and this helps you grow your thinking pattern. It helps you grow your ability to sustain yourself as a compliance person, and from there you are able to grow your career in compliance. So hi, okay, I think I responded to this already. This question keeps coming up again. My question is now on how best for those that are already in financial institutions to transit to compliance role. We all know how hard or nearly impossible it is to transition. Maybe I have to let my colleague answer this question. Hi, Osas, please, is it that hard to transit from other departments to compliance?
Yes, I'm here. Apologies. Okay. I said, why do you want to set me up with this? Because the truth is, the person who asks the question, of course, is speaking from he or she's current reality based on how the organization is structured. So no two organizations are structured the same. In some institutions, it might be easy. For others, it might not. Like, for example, I did not start as a compliance person. While I was in UBA, I was first with fraud. And fraud is a different team entirely. When I was doing fraud investigation, then I transitioned to compliance. And to transition to compliance, then it wasn't so difficult, to be honest. There were teams that maybe, and that's not to say that's easy in UBA, because there are also some other teams. I had friends that wanted to go to, let's say, Treasury, for instance, and they couldn't. So I understand the fact that it could be, I understand the fact that it could be, it may not be a straightforward tax, but if you are interested in it and you put conscious effort to it in terms of maybe getting certifications, maybe at the very least, maybe get DCP, have the conversation with your supervisor as to why it interests you and all that. Except the supervisor is a very unreasonable person. If they see that, okay, oh, you are serious and it's something that is giving you drive, I'm sure they would they would push for it. And again, it's not what's the word? I'm not advocating that everybody leaves their company, as it were. You can also still seek options in other institutions. But what would then give you the edge would be that you have made conscious effort to it. Because if you say, oh, okay, I want to join compliance, and they're asking, okay, why or something, or what do you even know about compliance? What have you done in terms of it? You know, having at the barest minimum, maybe that discipline would be a very good way to show that, okay, you're actually serious about it and you've gotten one certification. So while I understand honestly the fact that institutions are different, it might not necessarily be the same. I cannot generalize because my own personal experience might not be the same experience someone else would have. I would say putting conscious effort to it and being vocal about your interests. Of course, vocal and respective and being respectable about it. Of course, you're not just going to be rude or go about it in a very harsh way. No, of course, respectably put conscious effort, and I'm sure the universe would make it work out for you. But I think maybe the first bit of it is to establish that interest, let it be known, let even know what it will take within the company itself. For some companies, they may say, oh, before you can move, you need to have gotten so and so in appraiser, or you need to have gotten, so maybe you want to find out exactly what it takes where you are currently, what it would mean. Is it a case of appraiser? Is it a case of the team, that's a compliance team now, having a space for you to come in, maybe having a need for you to come in, or maybe your team willing to release and all that. So there's a whole lot of variables that would come into play. But I believe if you don't talk about it, if the opportunity arises, you would never know. But if you are constantly on it and you have shown serious interest, you have put effort in getting certifications, if opportunity arises for such move to occur, I'm sure you will be readily available to grab it.
Okay, thank you very much, Osas. That being said, I also want to add that yes, there are several organizations at the moment that are looking for compliance officers. Now it depends on what you want to do as a compliance person and how you want to switch. So at the end of this training, I will drop my number in this chat for possibly those that are joined without having to register. Possibly you got a link from friend and all that, so you can reach out to me. However, if you want to switch from whatever role you're doing, it is best that you have a basic knowledge of what compliance is, and that is why we had this training today. So that when you're speaking to anybody during interview, you speak with conviction that yes, you know what you're doing and you're capable of bringing a new intelligence into compliance. And to also spice it up, like I mentioned at the opening remark, CBN has released at least 8 circulars. Those 8 circulars are not going to be managed by the number of compliance we have in each organization as at today. I know of a financial institution that literally recruits compliance officers every month. They are looking for compliance officers every month. These organizations are looking for compliance every month because they don't have enough staff, but because regulation demands that they have enough staff to be able to man whatever thing they are doing. And coupled with the baseline standards that was released in March, I can assure you that between next month to possibly before December, there will be numbers of openings that will have, especially in the fintech role. So most people just don't want to possibly move to compliance because, oh, they don't want to read, they don't want to stress their head with regulation. It is not easy for you to be quoting section this of section that, even when you are not a lawyer. I myself, like Osas mentioned, he was never a lawyer. I didn't studied law. And he didn't study law, but we are both in compliance. And also have seen a number of people on this call who are in compliance but didn't study law as well. So what you study apparently does not really restrict you from being in compliance. What helps you grow in compliance is your ability to analyze and pay attention to details, and also your conviction that you want to be in compliance. So, but at the end of this training, like I say, I'll drop my number in the chat, and you can always reach out to me on WhatsApp and we'll talk more about it. So if you want to switch, then how do I register for DCP? You can always visit the Compliance Institute of Nigeria website and to register. Or if you need personal guidance, I can also share the number of the admins to the WhatsApp group for Compliance Institute. They will always be willing to have you come join compliance. So once you pay, they will guide you through. I think the next exam should be next 2 months, which should be July, because that should be the last exam for the year, or thereabouts, or September, I think. So before that should be the last exam for this year, so that every candidate or everybody who wrote exam between January to date will do their induction in December. So that is just what you need to write the exam. All you need to do is make your payment. I think it's about 140,000 naira now. So once you make your payment, you get access to the material, you pick your exam date. Your exam will be written in less than 2 hours. It is a remote exam. You write your exam from home. You can also choose a location for yourself. So maybe you don't want distraction, you don't want anybody to distract you during the exam. So every do's and don'ts will be given to you at the point of induction, or rather at the point of registration for the exam. So you will be told on how you can conduct yourself, what you should do and what you should never do. So basically, the exam is not going to be hard. It just borders on regulation around Nigeria and the recommendation from FATF, and that is what it's all about. So if you're ready to write the exam, you can reach out to me, or you go to Compliance Institute. Just give me some seconds. Let me drop the website, Compliance Institute of Nigeria. So you can always reach out to this website on this chat, and you will have access to register for your DCP. Is DCP recognized internationally? At the moment, DCP is only recognized in Nigeria. However, according to the CIN and Chartered Institute of Bankers, I recall that as at last year, they said they were making findings, or trying to make sure that DCP is internationally recognized. But as we speak now, it is only recognized in Nigeria. So if you're writing DCP, you're sure that yes, you're only using it in Nigeria. But if you want to write an exam that will help you gain global recognition, or that will help you when you leave Nigeria, or whatever thing you do outside Nigeria, there are a number of them which we listed before now that you can take. Either you do the ACAMS, or you do the CFCS, or you do what's it called again? The CFE and every other exam. So the bottom line is the cost of this certification differs from each other. So CAMS is more expensive than ACAMS, while CFCS is almost equivalent to CAM. So ICA is almost the cheapest international exam that you want to write. CRMP is maybe you're focusing on a particular section of compliance. So yes, but for every certification listed here, DCP stands out to be Nigeria only. Every other certificate is globally recognized. So I think that being said, we have come to the end of today's webinar, and I really appreciate every one of us. I don't think I still have any question here. I appreciate every one of us that joined this call. Thank you all. And yes, I'm sorry I didn't unmute your question. Apologies. Somebody said, can we have a community, WhatsApp community, where we can always talk about this? Yes. Okay. So, like I said, this is my number: 090-090-68289147. So you can reach out to me on this number, and we can start a community. So it depends on our availability. It depends on what we want. It depends on what we need. So we can be able to know who wants to join compliance as a newbie, who is already in compliance but wants to grow in compliance, who is switching from other departments to a new department, and we can always help each other. So you can reach out to me on that number, and we will do great things together. Thank you, everyone. Thank you so much. Thank you, SARS, for coming to join us on this live. I appreciate you, and I don't take that for granted. I want to say a big thank you to all our participants, and thank you very much. Please, before we go, we can also subscribe to the YouTube channel so that we can always get a notification of the next program that we'll have. Before the end of August, we are going to host another program which is going to be focusing mainly on compliance professional. This time around, we are going to be talking about switching from traditional bank to fintech and mitigating how we can mitigate the risk associated with fintech. So we all know that fintech deals with mainly remote works and others. So most traditional banks don't do remote work. But with fintech, you can work remotely. You can work from anywhere in the world. Nobody cares where you're working from. And you can choose to also visit, like I do. You can choose to visit your office any time of the day and others. So we are going to be hosting another program. And for you to remain connected, please do us a favor to click the follow button and turn on our notification. So subsequently, you get a notification of our next program. Thank you all, and God bless everyone. Thank you.